Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on my podcast, I have Bryan Jaskolka. Bryan is a CEO and founder of CMI Financial Group. CMI was founded by Bryan in 2005 as a traditional mortgage brokerage. It has grown steadily over the last 15 years, attracting investors and borrowers alike due to their exceptional customer service, rigorous investment, and mortgage management process and commitment to excellence. After the 2008 financial crisis, there was a growing need in the market for private lending solutions. CMI responded by evolving into a private lender and establishing their first investment division in 2011, which was known as the CMI Mortgage Investments. CMI offers investors a curated selection of mortgage investment products that are personalized to each investor's unique investment objectives and risk tolerance. Their innovative approach to the investment selection process, rigorous due diligence process, exceptional service, and industry expertise allows them to help investors find high-quality mortgage investments that capitalize in Canada's traditionally strong real estate market. Welcome to the podcast, Bryan.
Thank you. That's a mouthful, huh?
I had to say it. So you know what? I think you have to be one of the first guests on that was requested. So we have an audience of mortgage brokers. And we had a few that reached out and they said, you need to do one with CMI because I know our firm has dealt with CMI and the brokers were as well. And they're saying you have to get a CMI on because they wanted to learn more about yourself and everything that CMI is all about. So just to jump into the thick of things, can you give us a little bit of your background? I know that you started off as in the mortgage brokerage space, moved into the lending. For you as personally, was mortgage brokeraging something that you'd always wanted to do since you were growing up? Was it something you fell into? How did you kind of get into that space?
You know, it's an interesting story that I've told a lot of times, as you might imagine. It's definitely a classic entrepreneur founder story a little bit. I did sort of fall into it. So ever since I was 15, 16, I was into starting companies and being an entrepreneur. My family just said it was in my blood, I guess, or whatever. I couldn't avoid it. So, even when I was in school or university, I was always doing something else on the side. And I actually got my start in technology. I would say it was a moderate success, nothing to write home about or retire, definitely, but good learning experience for sure. And I sort of fell into the mortgage brokerage industry like when it was all starting to become digital and everything was brick and mortar right at the beginning. And my expertise from the technology side was sort of what I was, the lens I was viewing the opportunity through. And I sort of fell into the mortgage side. And definitely, if you told me 20 something years ago that I would have spent the majority of my career and life at this point in the mortgage industry, I would not have predicted that. But, it's been great. And, as you said, we did start as a mortgage brokerage. The first 5, 6 years, maybe 7 years of CMI was as a mortgage broker. I was a mortgage broker. I did, thousands of mortgages for subprime deals back in the early mortgage, days and stuff like that. And so that's how I got experience in private lending. And then around the financial crisis, what happened was there was a genesis of the business. And through a combination of, I guess, my view of where the regulatory market was shifting, we opened up this lending side of the business. And so, we did run both channels, I guess you could say, for a couple of years. And then we really leaned fully into just being simply a private lender. And so our business does not do any lending, any brokerage at this point, like through directly to customers. So our customers are basically your listeners. People who are listening right now, it's just mortgage brokers. So, we're not advertising on TV, trying to compete with them or doing anything else. So we shifted our entire business, even though we started as a mortgage company, the genesis was into a lender, which exclusively sources our mortgages from the mortgage brokerage community. So that's kind of like our origin story, you could say.
So, I mean, CMI has grown tremendously, and I'm going to get to that in a second. But I want to step back and kind of understand what got you to at least go into the mortgage broker. Did somebody introduce you to it? Was it something that you're like, what's my next business? And it was there. What got you into the industry? And more importantly, what got you to stick around? Because it's not an easy business to be in.
Yeah, for sure. I mean, how I got into mortgages was sort of, I fell into it. I was getting out of this technology business that I was running. I was looking for a new opportunity. I knew a few people at the time who were in the mortgage business, and they were sort of telling me a little bit about it. And they were also sort of saying that, knowing my background, there wasn't a lot of companies doing the whole online focused mortgage broker. Today, if you don't do that, sort of, where are you? But 20 years ago, like, this was novel, right? So, I sort of, that's kind of how I fell into it. And then how I stayed in it, I mean, that's a good question. It's a tough business, right? And I think for me, as an entrepreneur, I enjoy building things and creating things. And, I'm not afraid to change with the times or adapt the business. And so we've gone through, different life cycles of how the company is. And so to me, it's engaging. It's interesting. Obviously, we've been successful with it, which is, makes it easier to stick with. But it wasn't always that way. People will always look at today, CMI is a big company and I'm a success and so forth. But that was never a guaranteed. I still don't think it's a guarantee. I mean, to me, CMI is still a startup, right? We have a very corporate culture, startup mentality, growth company mentality. We're still growing substantively. We're like almost $1.1 billion in mortgages, only residential under management. So, from a kid in his basement to, a $1 billion fund management company, with over 120 people, we've come a long way, but we're still growing. And I think that's kind of what makes it exciting for people to, who work here at CMI. And even for me, it's sort of that excitement that we're building something special, and, that, there's this big multi-billion-dollar lending company that we're really trying to build at this point.
Yeah. So what got you into then shifting from brokerage to like private lending? What was it? Was it something that you kind of dabbled in, or was it like, did you get a new business partner? What was the impetus to kind of move? Because they're in the same space, but at the same time, they're also very different beasts altogether. They may be in the same industry, but it's like two totally different businesses.
For sure. It's like saying that residential and commercial mortgages are all just mortgages, right?
Yeah.
It's, it's very different. We're today really an alternative investments company. A large part of our business is fundraising, working in that space. When I was a broker, I did a lot of private mortgages, and alternative mortgages was my specialty to begin with. And so there was a little bit of crossover, as everybody knows. Sometimes you have a friend or a cousin or somebody who finds you and says, can you invest money for me? You're a mortgage broker. So a little bit at the beginning, that's when it was running both ways. We started, having a little bit of that experience. And then ultimately what happened was there was really a pivotal period after the subprime crisis in Canada where the regulatory environment changed. And so private lending went from being sort of this underground lending community that was hard to access to becoming a little bit more accessible and more mainstream, a little bit more accepted by both the consumer and mortgage brokers at large. When I got into the industry, it was really a very small subset of mortgage brokers who did private mortgages. Today, lenders like CMI make it, kind of accessible on Filogix, and everybody knows who the private lenders are. So that's been a genesis of the industry in certainly the last decade. But when I was a mortgage broker, that was all changing, and so I saw the opportunity of moving into the lending side because I expected that industry was going to grow, and that by the banks pushing off what was essentially qualified mortgages days before into the alternative space, it was going to create a domino effect which it has. You would have more business going to alternative lenders, which in turn would then become more restrictive. Today, have more banks themselves anyways, and they're also regulated, which probably no one foresaw as much at that time. So you've really had a larger share of the market segment move into the private space. And the B20 regulatory environment in the beginning of that was really the catalyst for all that change. And so by recognizing that opportunity and shifting and pivoting the business into that, that's how and why we were both, I guess you could say, able to do what we've done, and why we chose to move from being a broker into the lending space at that time.
So when you're lending, and now our firm's had some exposure with CMI. I think that more than one, and on one occasion, I think you've saved a few clients who were, as you can see, I know you said 2008 is when you started. We kind of really saw a lot of CMI kicking in 22 and 23 because there's a lot of a lot of pre-cons that came in. Banks denied it, and I thought like CMI was able to come in, save the day, and it helped a lot of investors hold on to what they had, or investors, even people who are homeowners, hold on to what they have and be able to kind of streamline the entire process. But from our exposure, CMI's been in residential. Is that all like CMI? What's kind of your book of CMI's book of business? What's their kind of vision or strategy in terms of lending?
So we're all residential at this point. So we get asked actually about commercial and other types of lending a lot. And since we're a large company, people sort of assume that naturally we're in those spaces as well. And the truth is that right now we're not. We strictly are residential in terms of our lending. We are national, so we do lend all across Canada in the vast majority of provinces. There are a couple that we've chosen not to lend in, but the vast majority of provinces we do lend in, and we lend in urban markets. We lend in semi-urban markets. We lend in rural markets, and I think sort of the philosophy behind CMI as a lender is we really want to ultimately be a one-stop shop for our customer, and our customer is the mortgage broker, right? So it's yes, we lend to the borrower who ultimately is also a customer of ours once there's a concluded transaction, but our relationship is with the mortgage brokerage community. So we want to make it easy for that mortgage broker who, instead of having to have 20 lenders in their stable, one for GTA and one for like rural and one for seconds and one for first and one for low loan to value first and one for high loan to value first. And, all of a sudden, and this is just, 10% of maybe a broker's book is private. I mean, at the end of the day, if you look at the capital stack, like private mortgage is still 5 to 10% of the, residential marketplace. So it's a lot of lenders to maintain for a subset of what is essentially most brokerages business. And, our philosophy is to try and make that really easy for the mortgage agent and mortgage brokers so that they don't have to necessarily do all that. They don't have to necessarily run around and try and find cousin Jim or so-and-so to lend on this money, this borrower, because at the end of the day, if they can facilitate that effectively, efficiently, they can call 100 times and there's always money there. And, there's money there for seconds, and there's money there for first, and there's money for rural, and there's money for power sale, and there's money for a rush purchase. There's money for all these different types of deals, and we price accordingly. So if it's a rough deal, we're going to charge a higher rate and premium. And if it's a, lower risk transaction, we're going to charge less. So a lot of lenders, I think, that are in the market, they have sort of a couple of products, or they may have a certain price point that they're very efficient at. Our model is more complicated, but different in that we want to really be the one-stop shop ultimately to the broker on a national basis, and definitely, wherever they are provincially licensed at a minimum, and then they don't have to have as many relationships.
Yeah, no, and I see it all the time too, because I feel like with brokers, it's crazy enough, even on the A side, to have so many banks and underwriting rules are changing and everything is kind of constantly moving, and then to have this smaller portion of the book of business where then you have to go through so many kind of lenders and their nuanced deals. They're not as clear cut as the A deals are, which is why they're coming to you. But then to be able to then, if you have to have like 30 relationships, it makes no sense. And I found, at least from my conversation with brokers, that CMI has been pretty like forthcoming, and it's been more of a easy kind of effortless process. So can you speak to a little bit about what your mantra is? I know there's the one-stop shop for brokers, but when it comes to brokers, what's kind of your relationship like with the brokers? Does CMI have like BDMs? This might be a stupid question, depending on who's listening. Do they have BDMs, or is it like they're just calling? Are people changing all the time? What's kind of the relationship that they have with CMI, and how can they begin that relationship with CMI?
I mean, honestly, like I think the way you phrase that question is like the perfect answer, because CMI is very much a relationship driven lender, so at the end of the day, we're a sub component of the mortgage universe, right? And so we know that we're part of that broker's relationship with the mortgage industry, and we don't want to be just transactional, because it does create efficiencies within the process for ourselves, for the brokers, for their customers, once everybody understands how it works. Because as you said earlier, private mortgages are nuanced. It's not exactly just cookie cutter in a lot of cases. And we're a solutions-based lender, so we're going to try and find a solution rather than saying, this doesn't fit the box 100% of the time. But yeah, I mean, we are a relationship-driven lender. So what we want is a broker who will come present an opportunity in a transparent way with a good chunk of documents up front, that we know they've done their due diligence, they have an understanding of the transaction. Then we can receive the file, we can process that very quickly. I mean, even at our scale, we do same day approvals, evening commitments, and weekend commitments. I mean, we're kind of a 7-day-a-week company in that sense, so we're always moving. And the rate limiting step is I don't mean this disrespectfully to any listeners, but it is typically the mortgage broker in the transaction, because we're waiting for documents, we're chasing for follow-ups or things like that. So, we love when the broker comes and they're organized and they have the documents and the deal's not changing 17 times because, oops, the administrator input the wrong mortgage balance, or oops, they didn't, get the mortgage document. Like, you're a lawyer, you see this, I'm sure, on your end. Like, when there's not enough due diligence done up front, you end up with a mess later. And part of our commitment to our legal partners, both the ILRs and also like our lender representatives, like, we don't want to send a mess to the lawyer, right? So we're really making sure we're doing our due diligence as a lender, that when we're putting that transaction forward, like we close 95% of the time. Once we're instructed, we're going to fund that mortgage. Even if there's a small hiccup, we're going to look for a way within reason to make that deal work. So I think that gives people confidence that they know when they get a commitment from us that we're going to deliver on that. And the biggest thing we really want from our broker partners is just, give it to us straight. If there's a problem, okay, tell us here they're in arrears, or this or that, they're unemployed or whatever it is. Like, we're a private lender, we understand. Tell us the whole story, give it to us up front, and then we can adjudicate if we're comfortable with it and find if there's a way to make it make sense. Like, we're also not going to lend money to a borrower if it's not helping them. I don't believe in that. I don't think you build a business in the long run and at scale like that. And that's not good for defaults, because if the premise is wrong, then, you end up with a bad mortgage book. And like you said, like in 22, when people were in trouble, and in COVID, like 2021, March, the sky was falling. Like, CMI, we never disappeared. We didn't like say, hey, we're not going to lend for 6 months or a year and we're going to assess the market. I mean, we kept lending throughout all these crises. we provided a ton of money to shopkeepers and dentists who needed to refurb their places. So like, we are always there to support people. And of course, we're a lender. So like, if there's a problem on the mortgage, we're going to have to enforce or do something about that. But we're not out there to generate problems for the community, for ourselves, for brokers. We're trying to make everything we can work. And I think that's just, once people get to know us and they work with us enough, like they understand that. And I think the number one complaint that we have about CMI, people are like, oh, we asked for documents. Aren't you a private lender? But it's like, well, if you send me a deal 55% loan to value, you don't want to send me any documents. I mean, like, I could probably get over it, right? But like at 80% loan to value, like I want to do some due diligence because I want to make sure the premise is right. I want to make sure I'm helping that customer and that the broker is going to get a refinance out of this in 12 months or whatever. I don't want to just have a default in 3 months because the person can't pay and the premise was wrong. And that's not good for me, but it's also not good for the brokerage community, because if you do that enough times, then you're not going to be around in the future to continue to provide money for everybody.
Yeah. No, and I think the other thing is what people don't understand is when you're getting documents in, you're pricing it to what you're saying. And I agree, you're pricing it right. You could put in like a 30% broker fee and then be like, all right, you know what? Like there's no docs no matter what. But then if you want to price it and make it cost effective, 100%. And I to my own kind of firsthand experience, I know that with a lot of private lenders, last minute it goes back to the underwriter, and all of a sudden there's like a change in the interest rate. There's all this, and we've done quite a few with CMI. It's never happened from the legal end. I think that the documents are fair. They're not onerous or anything like that. They're fair for a private lender. Obviously, you can have more documents with the private lender than you would otherwise, but it is a good balance of rights for all parties, as opposed to, I know that with sometimes private lenders get a bad rep because I find that a lot of times they really they find somebody in trouble and they really stick it to them, right? For lack of a better way of explaining it. And with CMI, I frankly speaking, even now, like as you tell me that you're a private lender, the relationship that we've had with you and with your organization, psychologically I don't see you as a private lender, even though you are. I'm not giving anybody any legal advice here saying that you're not. You very much are, but you're very much an institution that is, like you're saying, out there to lend money, to just build those relationships, and 100% like what I've seen with a lot of private lenders is that, and I usually, if they're the lender or the borrowers on our end, I will say something where there's no exit plan. There's no exit strategy. Or the exit strategy is you sell your home because there's no way you're going to get out of this.
There's no affordability. You're not rehabbing the credit. Like, how are you getting out of this?
Yeah. And sometimes, I don't know, I feel like there's people out there, lenders out there that I don't want to say that they do it on purpose, but it's like you're nudging them over the cliff. And you're like, oh, I didn't do anything. They tripped. So
I mean, I'm with you. Like, I'm sure CMI would be a much bigger company, and there's probably be a lot, quite a few brokers even happier with us, you could say, if, we just approved whatever came to us, right? But like that's not a recipe for success. Like it just isn't, right? Like, I mean, that's very small time. And I think what we're not an institution, but we're an enterprise caliber private lender, which is a rarity. I don't want to say we're the only one. That's not fair to others, but it's a rarity still even today in the market. And we see the same things as you, the deal changes at the lawyer's office. Why? We did all of our due diligence. The broker did all of the due diligence, but the discharge statement comes in and the mortgagor is, behind 90 days and there's $50,000 into administrative penalties. Right. And then they want to come back to us and they're like, oh, can you lend more money to pay? Sorry, I'm going to say basically this crook off. Right. And I'm just like, well, maybe not so fast. So why don't you get an ILR to go hammer them, because that's not right, you know? And so I think there has to be, to your point, and I think this has been our success. We try and treat all the stakeholders fairly, the borrowers, the brokers, my investors, everybody. And so, if you don't pay, we're going to sell your house like every other private lender, but I'm not going to try and steal your equity.
Yeah.
And my staff is going to call you 20 times and text you and send someone to knock on your door and tell you to sell your own house long before I'm going to sell it,
Yeah.
right? Because even if you're going to have to exit that way, stage your house, clean your house, fix it up, sell it. We're not trying to take over the property. We're not trying to do those things. That's not our representation and our commitment to the borrower or the brokers, and even to, investors that we represent, because, CMI is basically a collection of different funds that we manage, right? Including mix, family offices, institutional money, and so forth. And, our commitment also to those investors is that, like, we want to treat all the stakeholders fairly. So if we see that this mortgage is basically doing nothing for a borrower and they're immediately going to default and all that's happening are fees are being generated, like, even if I think I can sell that house and I'm going to get out, like, that's not a mortgage that we're interested in.
Yeah.
Yeah.
I mean, and to that effect, and I don't know how much I should be sharing about this, but the one thing that sticks out about CMI more than anything else to me was we had a closing. CMI was supposed to be paid out, and the closing was on the same day. And so normally lenders have renewal fees and all of that. And we were under the right circumstances, and there was a lot of other stuff going on. So I don't want to simplify this to all the brokers listening to this, and you're going to get a million different calls. But there was different circumstances. But that renewal fee was waived because it was being paid off the same day, where we closed with the much more reputable banks. And if you pay it on the same day and there's a renewal fee, that fee goes on no matter what. Good luck trying to waive that. So for that, like, and it was not, I'm not saying it was, we paid it off after a week or anything like that. And there's all these other things. I'm giving a lot of caveats here.
Example, but
but that specific example, it helped us, the broker, everybody build a relationship and keep that relationship with the borrower. Yeah. Which meant a lot in the long run, because that means that, and I know from that experience, even the broker became a very CMI loyal broker, because he's like, I was able to save that business, because if this was to come on and if for no reason I'm losing this client because they're angry at me, I'm never going back. But after that, they were a brand ambassador to CMI.
And it could be their referral partner that's also getting upset, right? Depending on how they get their business from. It's a whole knock-on effect that can happen, and like, look, if someone calls me like a month later after renewal, like, they're paying all the penalties and fees, like, they're negligent as far as I'm concerned. We've already sent them like 10 warnings and calls and emails. Like, we're very proactive. We're not like oh, you didn't know your mortgage renewed 10, 15 days ago. Haha, here are the fees. We're not like that. We're like, are you renewing? Are you renewing? Are you not renewing? You need to renew. We're going to have fees. Like, we're very in their face. And that's like, no one can say that they don't know. Right. So, but at the same time, like, I was in the business, I was a broker. So I understand sometimes, despite your best efforts, the deal gets pushed 2 days. Right. So you end up closing 2 days past the maturity date. Should that person get hammered with $30,000 in penalties? Like, I think from an ethical perspective, I think there's some concerns around that, right? And I think, honestly, it's unfortunate that a lot of there isn't more awareness on this, but we've always tried to explain to our partners that, like, people will complain, like, CMI is great in all these things, right? But we're a little pricier than some of the others. I'm not ashamed of it. It's not a secret. Part of it's the type of risk we do take on versus others. Obviously, you're going to charge more for higher risk. And some of it is just how we operate, because with some of these other operators, their business model is surrounded by exit fees, right? So when you actually look at the cost of borrowing, it's more expensive. But you're not paying it up front. So the sticker price looks better, right? And then wait till if you have to pay that mortgage out 6 months early, or in the last 60 days or even 30 days of a 12-month term, and you're getting hammered a 6-month penalty, right? Like, we charge interest to maturity, so it's 30 days, right? Or you're getting a renewal, like, you're not getting the whole lender fee charged again, because we need to, like, monetize that same dollar over again in 12 months. So now your customer, if they do renew, and it, depending on the markets and ebbs and flows, it's anywhere from like 25 to 40%, let's say, right? Those people are not getting hammered a whole new lender fee. And then we're coming back to that broker 90 days before maturity, 60 days before maturity, and they're saying, hey, we're your CRM system. This mortgage is coming for maturity. Like,
Yeah.
go make money, go arrange and proper exit for this person. We're happy, they're happy. It's a good, symbiotic relationship. And the people who are, taking advantage, like if it's a renewal, then we're keeping them warm for them for another 6 or 12 months, right?
Yeah.
And if the broker's coaching them, their credit's still improving, their documentation's improving. So again, it should not be a one and done transaction for a quality broker. Like, it should be a relationship they're building with the customer, and it's a relationship they have with us. And they're, providing a solution to that customer that's 12 to 24 month in timeline duration. And then they're moving that person to a B lender. And if they do their job right, they should be able to transition them to an A lender, 12 to 24 months after that. And so the beauty from a broker's perspective on revenue, I mean, just talking about this as a business for a second, obviously we're all here to help people, but like, it's also still a business and people looking to make income.
Mm-hmm.
You can have a private customer who you're doing right by, right? They're not getting ripped off. They're not getting pushed out in 12 months because a lender wants to monetize 100% of their portfolio.
Yeah.
And over the course of 5 years, they might get 3 transactions with that customer.
Yeah.
Someone who they migrated from private to an A bank will probably be a referral magnet for them, I would guess. And we'll be sending them everybody that they can find because they changed their life. They turned their life around.
Yeah. No, I mean, and to what you're saying, I find that with a lot of, just to backtrack just a little bit, with a lot of private lenders in this space, there's a lot of tripwires. So you may have not as many fees getting in, like you're saying, but like as soon as you move a little bit, you trigger a tripwire.
Don't miss a payment
it's all
for
over.
15 days. Like, you'll lose your half time.
Yeah. So and then CMI definitely, it was from what I've seen. And again, like I speak from experience. I speak from speaking to just broker partners that we work with. It was always a smooth experience. It was a professional experience. That's the other thing. And I think that's very important when you're kind of operating a business, that it's not about like a lot of private offices. You don't have a lot of money. You're not doing a lot of transactions. You don't know who you're going to be speaking to next, and what the kind of entire ingestion of the deal changes. You know what to expect. I feel like with CMI, the paperwork's very straightforward. Everything's kind of straightforward, and up front, essentially, at least on the legal end, what you're getting into and what needs to be done to close the deal. There is no last minute surprises or anything like that. So that's like kind of my firsthand experience and experience of the people that I know and trust in the industry.
Yeah. I mean, I definitely think you could say, and everyone would agree with this, you may not like a condition that we ask for, but if you meet those conditions, you will get our money.
Yeah.
Like,
no, and those who know what that means, because by all means, private mortgages, like if it was a top, like it was I was gonna say top shelf, but if it's a client, then they're gonna be going to a different bank. But if this is a product that is for a special group of people who need it, who can be helped, but it comes with those conditions. Essentially, the important part that I find is that it is not taking advantage of somebody in that situation without it's essentially taking care of all of the stakeholders, because you've got investors that are a part of that you have to kind of take care of, make sure that they're represented, and as well as the borrowers. So you're kind of walking a tightrope.
We're basically the facilitator. We're trying to make everybody happy. And honestly, again, I think it's how I am philosophically. So I've aligned myself with like-minded people, but like none of the investors that I represent or investors in my funds or money that we represent, they're not out to get people. Like we're not loan to own lenders. Like, we're not trying to steal their properties. We're not trying to generate, revenue from all of it. I mean, it does happen, but that's not our business purpose. Like, there's, getting very granular for a second, like sometimes we'll have a house that we're lending on. There's condition problems, right? The house needs work. And so instead of saying no, we'll say, you know what, we'll still lend on that deal, but we might want to hold back. So we might want to, have in usually lender lawyer's trust account some amount, $5, $10, $15, $25,000, whatever it is. And sometimes we'll have borrowers or brokers who will be upset about that. And they'll, of course, want all the funds advanced. But, what they don't realize is the funds they're there. We advance it on day one. It's in the lawyer's trust account. Like, it's funded. It's not a draw that you're gonna have to fight for later. Like, this is money in trust at the lawyers, ready for final disbursement. As soon as that work is done, they get the money. Why do we put it there? Because one, we don't want to have to do the work if they don't do it. And let's be honest, some people don't do it, right? So we have to protect ourselves. But the second thing is, it's an incentive for them to do it.
Yeah.
Because even if they're going to sell their house or whatever it is, they will get more money for their property if they do these improvements that they themselves have come to us to say they want to do, or that, the roof is about to leak and your house is going to be destroyed. I mean, we're going to do a holdback for your roof, right? And it might be more than the $4,000 you say it's going to cost. Maybe I'm going to do 10 because I want you to go really, really, really fast and fix that roof. And the second you fix it, I'll give you the $10,000, right? So there's an incentive there, but it's not because I'm trying to hold their money or we're trying to do anything other than incentivize them to perform on their end as quickly as possible. And the money's there. I mean, it's there from day two. Bring us the appraisal update on the closing date saying all this stuff was fixed. We waive the holdback on the closing. There isn't even a holdback, right? It's just there to make sure that stuff gets done. And it's for the borrower's best interest, because at the end of the day, if they don't do it, I'm still selling that house. I'm still getting our funds back 99.8% of the time without any loss or whatever it is, right? It's there to help them, but it's also there to protect us, because if there's a problem, we need to have the money set aside to do the work. So, but it's all the mentality is there around maximizing the security for us or for them if they do decide to sell or try and exit another way. The right premise. So we, make sure that we're actually helping people. People you help, they tend to like you. They're usually incentivized to pay, right? And like, at the end of the day, underwrite to a level that there's an exit strategy for someone. And honestly, if the exit strategy is, I'm planning to sell my house and I need $50,000 to fix it up, and then I'm going to list it, and I can't make payments because I'm unemployed, but I have equity. I'll prepay your mortgage because I don't want you to bounce checks and then default you for no reason. We'll prepay the mortgage. We'll structure it the right way. And if we're comfortable with the security, some mortgages, that is how they exit. And that's not an impractical exit, I think what saddens me is when I see applications that, this person should have sold 6 months ago. Right. And they're trying to time the market or whatever it is. And they don't realize that in all the fees that they're chewing up from the existing lender, who's probably just abusing them like crazy. And then new fees from us and brokers and everyone involved in the transaction, even if they are able to get, like, the market is not going up so fast that this is a vibe, like that holding is covering all these fees. Right. And so they're bruising their credit. They're getting all of these problems. And, it was a house they couldn't afford, right, to begin with. And they don't have a lot of equity left. So those are the ones that we're not that keen to then step in at the last minute and bail out imprudent lending that was done, But people who are in, distress for good reason, I guess you could say, if there is such a thing, those are people we want to help. Situational borrowers, help them get back on their feet, help them get back on the right track.
CMI should be the first choice, not the second choice that's coming in when everything else is lost.
Yeah, exactly. Like, if it was done right, then they probably weren't going to be in that mess to begin with, right? Because someone made sure that, the creditors were paid off, right? And they did get the credit repair that they needed, right? And that the income is there to be able to make the payments. And like, there's some level of due diligence that says, okay, like, we were brokers too at once upon a time. The people who work for me have worked in the institutional channel. Like, we know what's going to get into an exit mortgage at Haventree or Home Trust or Community or whoever it may be. So like, I want to make sure the premise is right, because that's what's helping people. And then those people will pay as a borrower to the lender, because there is a light at the end of the tunnel for them. You're doing them a good service by helping them, even though, they're paying a premium because they are that high risk borrower. But their alternative is to lose their house or sell their house in many cases. Or in the case of purchases, like you said, they're defaulting on that contract and they're not getting the money back from the builder. They're losing that money because they can't close the bank qualifying rates up, or they're lost a job unexpectedly, or took a credit hit for some reason between the purchase and it happens all the time, right? So, it's purchases, it's refinances. Whatever it is, we're kind of always looking at it from the same perspective.
There's a goal for the entire lending process, but I wanted to change gears a little bit and ask you, I guess, What's CMI's goal for the next 5, 10 years? Where's CMI headed? What would you like to see happen? What's kind of your at least public strategy in terms of where CMI is going to be 10 years from now?
Well, I hope these comments age well. 5 to 10 years. Our current vision is really to continue on the growth trajectory that we've started. And we have a multi-billion-dollar goal set in mind in terms of the size of our lending company over the next 5 years. So I think we'll achieve that through a combination of simply continuing to grow the funds that we represent, and also entering into new markets, new products, all within the residential space. But we definitely are not done. I wouldn't, I'm a pretty young guy still, so we definitely haven't hit pause on the growth ambitions for the company. And I think now, given where interest rates are headed and the interest rate environment and the overall economic climate, I actually think it's a good market for real estate and lending. As a lender, I don't really like when the market goes up 25 or 30%. I mean, I love it as a homeowner, like everyone else does,
Yeah.
sure. But as a lender, it's kind of hard to figure out, how do you underwrite to that? Either you're overly conservative or you're overly aggressive, and neither really works
Yeah.
that well. 5%, 8% traditional markets are excellent for investors, for brokers, basically for everyone. I mean, if people stop looking at their house as an ATM machine because it's going up 30% a year, and put an effort into productive capacity things in the economy, everyone would be better off. We would all be better off collectively, right? So I think the interest rate environment will be favorable for that. I think the regulatory environment is restrictive enough that it's going to continue to keep pressure, hopefully, on housing, that prices don't get back out of control, and that will correct some of the affordability issues, over the coming 3 to 5 years. Obviously, everybody knows they need more supply, and I think they're catching on to the fact that they need to tamp down on demand for now until they figure out how to make supply on the housing side. So, I think that there is opportunity, at least over 5 to 10 years, for the situation to improve. And Toronto is, at the end of the day, a fourth largest North American city and is cheap compared to most of the other major US metros like Miami or New York or LA, San Diego, Austin. I mean, Toronto is, in that context, not as expensive as people perceive it to be. But at the same time, there needs to be a stability to the marketplace that is predictable for everybody: investors, builders, developers, lenders, borrowers alike. I mean, it's not good for a borrower who gets into on a house at the wrong time. The market dumps 25% on them and now they're in trouble. That's not good for the borrower either, right? At the end of the day. So I think, slow and steady wins the race. It's a little bit how my philosophy is at work, and hopefully will be a little bit how the market goes, in the coming 3 to 5 years, now that things have seemed like they're on the downtrend for rates.
Yeah, no. Awesome. I appreciate your time. I know this is a long conversation. But one last question before we sign off. For all the brokers who want to start a relationship with CMI, what's the best thing to do? Do they just pick up the phone and call? Do you have a phone number on your website? What's the best way to reach out to CMI and start building the relationship, whether they've got a deal, whether they just want to talk about what you have to offer? What's the best way to get in touch with CMI?
So, if it's an agent or mortgage broker who's at a firm already registered with CMI, then they would likely have a dedicated underwriter or dedicated BRM assigned to their brokerage, that their principal broker hopefully would know who that is. But at the same time, we're also on Filogix. So essentially, they can send that deal in through Filogix right to us. And if they don't know who their rep is or assigned, they will still get a response. And they will get onboarded on the platform as long as the brokerage itself is already set up. If the brokerage isn't set up, then we have a team that they can reach out to, and they deal with all the principal brokers to help onboard them onto our platform. And then once they do, that'll open up access for their agents. And sorry, I said expert in Filogix because, I was an agent 20 years ago, but obviously we're set up on Newton as well. Pretty sure we're also set up on Lendesk. So, we are quite accessible across the three platforms that people are using today to get deals to us.
Awesome. Appreciate your time, Brian. Thanks for coming on. And again, yeah, for all those brokers, I definitely, and I'm not saying this because I have Brian on the I have Brian on the podcast because I'm saying this. So I definitely really like what CMI is doing. It's definitely worth a conversation for anybody who has a private deal and has not worked with them. Definitely reach out. And yeah, I know that from personal experience, you're going to have a good experience. Thanks for coming on, Brian.
Yeah, my pleasure. Appreciate your time as well. And thanks for having me.